Welcome to the CU 2.0 podcast.
Hi, and welcome to the CU 2.0 podcast with big new ideas about credit unions and conversations about innovative technology with credit union and fintech leaders. This podcast is brought to you by Quillo, the real-time loan syndication network for credit unions, and by your host, longtime credit union and financial technology journalist Robert McGarvey. And now, the CU 2.0 podcast with Robert McGarvey.
Do credit unions have a future? And if they do, what is that future? Meet Lamont Black, a Filene Fellow, Credit Union of the Future. Who better to talk about the future of credit unions than Dr. Black? Spoiler alert, Black is optimistic about the future of credit unions. A finance professor at DePaul University, Black also is a busy writer, speaker, consultant who focuses on innovative technologies, including AI and Bitcoin, and nowadays especially stablecoin. In the show, Black is articulate in explaining why AI matters to credit unions. He also offers an understandable description of stablecoins and why and how credit unions should hop aboard. Understand the estimated volume of transactions around stablecoins in 2025 was $33 trillion. That's with a T, not a B, $33 trillion. Big banks have hopped aboard stablecoins, so have giant retailers, think Amazon and Walmart. Buckle up, this show is a fast ride. So we're going to talk about, among other things, perhaps credit union of the future, and you are the Filene Fellow with expertise in that, correct?
Yes.
So is there a credit union of the future, and what will it look like?
Yes, there is a credit union of the future. I tend to be an optimistic person. But yeah, I think it'll look different than credit unions today. I think it'll be still the same core mission and values, people helping people. But I think they will be using different technology, AI, stable coins. So they're going to be a different means to the same end, but they will have to adapt over time.
If you had to make a guess about the number, what kind of number would you pick?
Yeah, I think there will be ongoing consolidation like there has been. I don't anticipate a massive acceleration in that trend. I know there's certainly worry about that with technology accelerating mergers and acquisitions, but I think a lot of the new technology that's available, both AI and stable coins, is very accessible to smaller credit unions. AI in particular, I just think, it's so easy to use these tools now, and there's so many applications that can benefit credit unions, even 500 million and below. So I think that old story about you have to be big to adapt to modern technology, I think that's an outdated story. I think with these modern platforms like large language models, they're available for anybody to use.
I completely agree with you. However, my talks with credit unions, I don't hear small credit unions doing much with AI, to be honest. You can get to about $1 billion in assets. And those guys, those CEOs now refer to their institutions as small. They $1 billion, you're starting to see significant AI. Below that, I don't see that much. They should be using it, but I don't think they are.
Well, yeah, I think you and I agree about that. So it's accessible, it's out there. They are not using it as widely as they should be today. We've done some survey and data collection through Filene on AI adoption across credit unions, and we broke that out around $1 billion plus and $1 billion below. And you're correct that even in the data, the adoption rate for smaller credit unions is slower. But I think that's really about education, about culture and organizational change. So like I'm doing a webinar in a couple of weeks for NASCUS about AI adoption for small credit unions. I think that we just need to get the message out there that this is something that they can use for operational efficiency, for member experience. I think there's a lot of fear around AI at the board level, even at the executive level. And so one of my goals with my company, Wide Open Ventures, is to help credit unions put in some of those guardrails, like an AI risk policy, so that then they can get comfortable that this is a secure sandbox for them to be working in. And once they get over that hurdle, then it's really about the creativity and problem solving, about just figuring out how to use these tools to get through those pain points and those frictions so that they can run their business more efficiently and meet their members where they are.
A credit union doesn't have to cook its own AI. In fact, I believe only 2 or 3 are capable of doing that. There are plenty of vendors out there with AI. Glia and Eltropy, for instance, will sell to smaller credit unions. And they have, this is not broad, it's not broad LLM AI, but it's AI tools. So you can get comfortable doing something like that. And I'm not recommending either of them. I'm just saying they're available.
Yeah, I think there's plenty of great partners out there in the credit union space. You mentioned some that can help with like contact centers and managing member servicing. There's plenty in the lending space to, help do consumer lending, starting to automate some of that underwriting a little more efficiently. And just think that credit unions, even smaller ones, need to be, getting up to speed on what's available and then exploring, experimenting. And where there aren't obvious vendors, and I do think there's gaps in the market, even using something like Microsoft Copilot. It's a little bit
Yes.
like a Swiss Army knife, but there are a lot of amazing things you can do with a tool like that to apply within a particular department or team to help them solve their own problems.
And Anthropic has a bunch of discrete tools, AI tools, that are tailored for specific industries, including the credit union industry.
Yeah, for
And
sure.
you
Claude is a
just
great
buy it off.
tool.
You just buy it off the shelf. So it's, but yeah, it's that fear, and I think part of it's at the board level. Credit union. I'm an old guy, so I'm not making anti-age comments, but a lot of credit union boards, particularly smaller ones, have really old boards.
Yes, I do a lot of board presentations on AI and stablecoins, and so I've gotten to know the credit union industry boards pretty well. And there's a whole range, and some of them are older, some of them are younger. There's also, some of them are whiter, some of them are more diverse. There's just a lot of different cultural dimensions to them. But one thing that has been a very pleasant surprise to me is that some of the boards with older board members are the ones that are the most forward leaning and future thinking. Like I've met with boards, board members in their 70s. One of the boards even had a guy in his early 80s, a retired Army veteran, and he was on top of this stuff in an incredible way. He was just smiling the whole time. He was like, I think this is the future. We need to be doing this. So those stereotypes about older board members are not always true.
Oh,
And
yeah.
one of the, just real quick, like one of the same board members on that board, this guy's probably in his 70s, he was pushing the executive team to open up Copilot to the board members so that they could start reviewing the board packet using Copilot. And
Cool.
that's the type of engagement you want.
Yes, that's I love hearing that. And yeah, I'm certainly not saying all old people are stuck in a prehistoric time, but yeah, it's cool to hear some of these people are jumping into this because it is today. Now, a curveball question. What got you interested in credit unions in the first place?
Well, I have to admit, it wasn't just, out of the blue. It was really an invitation I got originally from Brian Knight, who's now the president, CEO of Nascus. I was doing a lot more work on the banking side with commercial banks. Hopefully that doesn't offend anyone here. But yeah, about 2021, Brian found me through a connection, a guy named Sebastian Monet, and I did a presentation, a webinar for Nascus on crypto, because there was a lot of focus on Bitcoin at the time and offering Bitcoin to members. And then it was the California Nevada Credit Union League, Diana Dykstra, who was on that. She invited me to speak at one of their events, like a Western States Roundtable. That was early 2022. And then it's, credit unions are very word of mouth. And so I did more board presentations that year than I had ever done in the past, for sure. And so that was 4 years ago, and it's been a great journey.
Yeah, I got involved with credit unions some years ago. Well, I was a magazine newspaper writer at that point. An editor from the New York Times called me up and asked me if I want to do a piece on credit unions. And my calendar had a space. So I said, yeah, I had never heard of them before. I certainly had seen them, but I didn't know what they meant. Didn't know what that meant at all. And and the piece came out. It was pretty good. Editor, Credit Union Times contacted me and asked if I'd do some work for her. And I said, okay. One thing led to another. And you kind of get seduced by the credit union difference, if you will, or you don't get seduced, which is another option.
Yes, yeah. No, it's been a great fit for me. I think I consider myself a people person, and I see not just the friendliness of the credit union leaders, but their really like heartfelt desire to serve their members. And I'm a trained PhD economist, and so I've studied like the theories of the firm and corporation, and the organizational structure of credit unions is totally different. It is not your traditional maximizing shareholder value in the traditional sense. It is serving members because they are the owners of the organization. So it creates a different set of incentives. And I think that shows in how credit unions operate.
Yeah. Now, co-ops are also largely ignored by academia. And credit unions, of course, are subsets of co-ops. But it's now you were mentioning stablecoin. And that's a topic that fascinates me because the big banks, JP Morgan Chase, for instance, have wrapped their arms around stablecoins. I don't hear much action in credit unions, and I didn't hear much action in credit unions in Bitcoin either. But it's why should credit unions be interested in stablecoin?
Well, first of all, I would say I think there's a ton of action around stablecoins with the credit union industry. So with the Genius Act, which was July 2025, that was a tipping point in the conversation, something that felt more kind of futuristic. I've been giving crypto and blockchain presentations to credit unions, like I said, for 4 years now. And it used to be kind of pie in the sky, just, hey, this is something that's out there. You should probably understand it. But with the Genius Act, like stablecoins have become very here and now. 2026, we're going to get more rulemaking from the NCUA, implementation by the end of the year. So for me personally, just like my line of business, as I said, I do a lot of speaking and consulting for credit unions through Wide Open Ventures. And 3 to 4 years ago, it was all crypto focused on Bitcoin. And then over the last year or two, it was almost entirely AI and AI adoption for boards and executive teams. But post Genius Act, I would say half my invitations are AI and half my invitations are stable coins. That's at the board level, board education, but also with executive teams now trying to figure out what this means for them, what it means for payments and deposits, interchange fees and liquidity. I think it is a wake-up call, the strategic risk that is out there if the payment system shifts towards this digital currency. And so the credit unions I work with are all over this. They're trying to figure out, do we need to issue? Do we need to facilitate existing coins like USDC? How do we collaborate? Is this going to be a credit union industry solution? So I think 2026, the credit union industry, we're going to get more and more announcements, not just about individual issuers, but an industry token. And my goal is to just help the credit unions think about the strategy of how do they prepare for the implementation of the Genius Act so that they're ready as things really accelerate later this year and into 2027.
What are the advantages of stablecoin?
Well, the real advantage is in the underlying technology. It is a totally different payment rail. And so, if you just put the user experience aside for the moment, In my presentations, I try and highlight that stable coins are now the leading use case of crypto. And so if you've heard of blockchain, if you've heard of cryptocurrency, like it is using that same technology. And what a blockchain is a shared or distributed ledger. It is designed to transfer value on the internet. And so as we move into this more modern digital economy, it just makes sense that we would have like a digitally native currency, like credit cards, ACH, all of that stuff dates back to the 1970s or 80s. And it was really designed to message or communicate between the ledgers that reside on core systems. It was never designed to be a shared ledger, which is what a blockchain is. And so stablecoins with blockchain open up this whole new potential for efficiency, for programmable money. That's a phrase that people are starting to learn more about. And, when I think about transaction fees, like a merchant processing fee today, which is typically around 3% for a card transaction, stable coins, because of the efficiency of blockchain, that's going to be pressed closer to 1% or even below. And so I think it really creates this competitive disruption potential. And I know credit unions are looking around and saying, well, my members aren't asking for this. I don't really necessarily see demand for it. I think that's going to come from the merchants like Amazon, Walmart. Both of them have said they're going to be issuing their own stable coin. And so as merchants try to find their way around merchant processing fees, they're going to be incentivizing the use of stable coins. That's going to put it more directly into the consumer networks. And so I just want to make sure credit unions see that potential scenario and start preparing for that, so that as their members start shifting towards this different method of payment, which will likely happen as soon as 2027, I just want to make sure they're prepared for that they have a seat at the table, and that they're able to kind of build that bridge into the crypto ecosystem through a wallet, through some type of, stable coin interface. These are the things that they can be working on in 2026.
So if I listen to you right, one of the immediate contact points will be interchange rate, right? And interchange will go from, say, 3 or 4% to something more like 1%. And MasterCard and Visa are howling as they hear this. And many credit unions are howling too, because they get a good chunk of interchange. What's the good news in this for credit unions?
I do think that the risk is very important, because it's not really like a different type of interchange fee. It's a different type of transaction fee. Like it is shifting to an entirely different network or payment rail. So it's not just a compression of existing margins. It's like, hey, it's like shifting from like VHS to DVD. Like they're two completely different players. It's not like you just kind of bolt one onto the other. But the opportunity I see is always tied back to that credit union value proposition of trust and service. I teach money and banking here at DePaul University, and one of the things I tell my students is like money is always about trust. It doesn't have intrinsic value. We're not using gold or physical commodity money anymore. It's all like whether it's the trust and faith in the US government or the trust and faith in something like a stable coin. That's why stable coins are backed by dollars, because people trust dollars, but they can use stable coins. But people are not going to be comfortable using stable coins because it's new, it's different technology. And so I think credit unions have an opportunity to build this like on-ramp and off-ramp between what's called fiat currency and stable coins, so that their members can more easily move their dollars into and out of this ecosystem. They're not going to want to do that with some just unknown third party. Even going to Coinbase, which you can do to buy stable coins today, not everyone's going to be doing that. And so the more they can offer that as a service, I think they will attract members who want to explore this ecosystem. And then the service they provide around that, there's a lot of debate around like fraud, chargebacks, and so on. They want to make sure that this is a safe and secure means of payment for their members. And then if they're able to establish that, their members are going to be excited about using stablecoins through the credit union.
Well, we've heard the same issues around fraud, et cetera, with Zelle, which is doing quite well. So, I mean, these issues are surmountable. Now, Bitcoin, as I'm sure you know better than I, has had a reputation among many people in the credit union industry as a kind of hinky, possibly dangerous, and way too volatile medium. And I have money in Bitcoin, not a ton of money, but some. So I'm obviously I'm not terrified of it, and I don't see it as too risky or too unstable to deal with. But what makes stablecoins safer, if you will, than Bitcoin?
Yeah, there's two key dimensions. So, first of all, I think Bitcoin is an incredible innovation. If you go back to the white paper in 2008, the title is peer-to-peer electronic cash. And so that it was designed as a form of digital currency. But as you said, most people today view Bitcoin more as an investment, where they're not buying Bitcoin to transfer it or sell it. They're not using it for pizza and coffees. They're putting it in their portfolio. I'm a significant Bitcoin investor. It's gone through some cycles over the last year, but, I'm very bullish on the future of Bitcoin in terms of price action. But stable coins are really a totally different use case. They are pegged to the dollar, and so they don't appreciate. There is no capital gain. It's not something that you buy to go up like a stock. It's something that you use to spend like money. It's a medium of exchange. And so the stable in stable coin is removing that price risk. So rather than viewing it as something volatile that could make you rich, it is something that is stable. And then the other key feature that the Genius Act really hammered home is all of the compliance features around today's payments, like KYC, AML, BSA. Think of that as like identity verification. That's what most people have not liked about Bitcoin, this idea of it being anonymous and it's criminals and drug lords. It's just this payment rail for the dark web. All of that goes away with US stablecoins now because to be Genius Act compliant, you have to know who's using this payment rail. And so I think it really builds this bridge between traditional finance and what's called decentralized finance. And it brings the benefits of traditional finance, like identity verification and price stability. But then you get the benefits of decentralized finance, which is that blockchain decentralized ledger. And so I view this as a benefit of bringing the two together. And I think credit unions have an opportunity to like sit at that intersection to be part of that bridge. And so, I know a lot of boards and executives, it's new, it's foreign, and it can be a bit fearful, kind of like AI. And so it's very much the same conversation. This is about technology adoption. And so my main recommendation to credit unions is begin that education process with the board, with the executives, with your teams, so that people can understand stable coins. Then they're going to be less fearful, and then they can start thinking about those more important strategic decisions.
Bitcoin's value is quite volatile. It can go up and down significantly in a day. And whereas a stable coin, the name stable coin says, well, it's not going to do that because this is stable. And as you say, it's backed by the dollar, and the Bitcoin is backed by basically nothing. These are remarkable differences, I think, that ought to make stablecoin a lot more palatable to credit unions. But there are no vendors selling Bitcoin into the credit union industry, are there? I'm not aware of any.
You mean stablecoins?
Yes, stablecoin. Yes, Bitcoin. There are some, but yes.
Yeah. I mean, the Bitcoin vendors, that's like I said, when I got involved with credit unions in 2022, NYDIG was the leading provider of that. There was a lot of discussion around credit unions, offering Bitcoin to their members. That was also when Bitcoin prices collapsed and we had FTX. And so everyone quickly backed away from that. But I think stablecoins are a much better fit for the credit union industry because it's not a speculative investment. It is a means of payment. It's a store of value, and it's much closer to the core value proposition. And there are vendors in the credit union space who are offering stablecoin services. So like Metallicus, Bank Social, there's one that's I think kind of on the periphery still, but more so on the banking side that's approaching called Stablecore. And so I do think that we're going to see more fintech providers offering their services. We did a whole summit at the Filene Big Bright Minds conference in December, and we had some of those same vendors pitching and explaining their technology. There's also, there's coalitions that are forming looking at issuing a credit union stablecoin for the industry. So like MDC, Circle, and TrueStage are one of those partnerships. Corporate credit unions are looking at their role as a payment and liquidity provider for the industry. And I think some of them are recognizing, hey, this is a natural fit for a corporate credit union potentially to offer a stable coin. So I think we're going to see more and more action in 2026. There's some individual credit unions who have already issued their own stable coin, like St. Cloud in Minnesota. And I think we're going to see more announcements like that. My prediction is that we will see several credit union industry stablecoin options emerge over 2026. And it will be a bit of time to see kind of pros and cons of each and what that competitive landscape looks like. But I think by the time we move into 2027, we will start seeing a little bit more convergence, and I think this will become more mainstream. So some credit unions, I think, are taking a wait-and-see approach until that industry coalescence emerges. But I think it's just going to be a matter of time. And as I've said, you don't want to just sit on your hands and, think that this is going to, show up maybe a year from now. This is definitely the time to be educating, preparing, even experimenting, getting some of those payments and deposits folks on your teams up to speed so that they are prepared for that transition.
Would you recommend that credit union executives personally buy some stable coin?
Yes. Yeah, I've been out there, even when I was talking about crypto, I encourage executives to buy Bitcoin or Ether or, Solana, because there's no better way to learn a technology than to have a little bit of skin in the game. I was at a Go West event just last week, and some of the executives there I had met in that first year. And so 4 years ago, I had made that same recommendation. And one of them said, hey, I still own it. I watch it. It goes up and down. For many of them, it's just a few $100s. But once you start tracking it, it's human nature to pay more attention. And I think it's similar with stable coins. Even opening a Coinbase account and buying some USDC on Coinbase is a great way to get started. I've done exercises with multiple credit unions in the same room where I helped them set up crypto wallets, and they actually transferred stablecoins from one executive to another. And then we pulled up a blockchain and they could see their transaction on the public blockchain. These are the types of things that often are kind of the aha light bulb moments where people are like, oh, that's what a distributed ledger means. And so, I'm a big believer in experiential learning. I do it in my classroom, and the same concept applies when I'm working with credit unions.
Yeah, I mean, I follow my Bitcoin investment. I'm not slavishly, but I certainly do look in every so often because it's up, I don't know, 150%. And you go, wow, that's really cool.
Yeah, makes you wish you'd gotten in earlier and more.
Exactly. But it's you do, once you get some skin in the game, you suddenly say, hey, this isn't as wacky as I thought it was.
Yeah, I mean, I view it as just part of my overall investment account. And, as a bit of a side note, if people are still uncomfortable buying crypto on Coinbase, like if people haven't heard the news, there are these things called crypto ETFs. So you can buy crypto as an exchange traded fund, just like you would buy stocks. I do most of my Bitcoin investing through my financial advisor at Morgan Stanley. She thinks I'm crazy, but she can put in and process that order just like she would for like an S&P 500 ETF. It is now the same method for purchasing crypto. And so it's all part of just one portfolio.
So people sit there and they listen as you talk about stablecoin. You don't encounter skepticism?
I think the skepticism is more just a natural question of, is this going to be significant or not? And over what time horizon? So I'll give you an example. So at this Go West CEO collab we did on Friday, we had, I think, about 60 credit union CEOs in the room. I presented on stablecoins for about an hour just to kind of provide some of the fundamentals, make sure we're all on the same page, talked about the Genius Act and so on. And then we did this discussion, like workshop, each of the roundtables. And my first question was like, how significant do you think this is? And do you think this will be transformative or disruptive within the next year or two? And I think it was roughly a 50-50 split in the room. There were some tables that were saying, Dr. Black, we agree with you. We think this is already happening. We need to get up to speed now. This is, both important and urgent. And some of the tables disagree with me. And they would say, we think this is obviously in the news, but, we don't see this disrupting the card networks or ACH anytime soon. We've got these legacy providers. They obviously are the incumbents that have a lot of weight and history. And no one has a crystal ball, and I'm certainly not going to shame anybody who disagrees with me. We're each entitled to our opinion. So I think that's the type of healthy discussion and debate we need to be having in the credit union industry, so that we can really weigh out those different arguments. And I think people are going to fall on different sides of it, but the credit unions I'm working with obviously are the ones who see this as being more pressing, and they're trying to use 2026 as the year to prepare for something that could be quite big in 2027.
Well, the card networks already have some vulnerability. I mean, Walmart has been pushing this bill that surfaces in Congress that would allow for a lot more flexibility in interchange, i.e., not necessarily using MasterCard and Visa rails. It's so you have one of the two biggest retailers in the country saying, we don't really like the current system too much. So, and as you say, both Amazon and Walmart are certainly kicking stablecoin around.
Yeah, if you just think about like merchant incentives, their goal is to reduce transaction fees or processing fees as much as they can. And one of the thought experiments I like to do with the credit unions I work with is like, imagine Prime Day in 2027. And let's just say that Amazon has issued Amazon Coin by that time, and they have started building in all kinds of incentives for their customers to use Amazon Coin rather than a card. On Prime Day, what is your member going to do? There is a chance that they will use Amazon Coin rather than your card. What is that going to do to your interchange fee income on Prime Day? That's not going to like put a hole in your balance sheet, but it would be material for some credit unions. And so it's just a helpful thought experiment to recognize like, hey, the world is changing, and you don't want to just assume that next year will be the same as this year, because that's when people tend to get a bit lazy, in my opinion, and say, just kind of assume that things will remain as they've always been. As you think about like Kodak and the shift from physical to digital, as you think about Blockbuster and the shift from, brick and mortar to streaming, these are transformative moments. And nobody knows whether stablecoin is at that level, but I think it has that potential. And so, it's kind of future-proofing your organization with a little bit of investment now. Maybe, the wave will pass by, but you certainly don't want to find it crashing over your head.
Kodak, by the way, has a new digital camera. I think it's 150, 175 bucks. That's pretty much the biggest seller in the market. And I mention that because for years I've said Kodak is dead. Well, no, I was wrong. They apparently have come back. Now, as a customer, an Amazon customer, how would I use that stablecoin instrument? And I happen to have an Amazon credit card through Chase. And that credit card is great because it gives me 5% back on all Amazon purchases.
Yeah, well, I think, what these will look like is at that checkout, in an online purchase transaction, there will be different options, just like you can choose from different credit cards, or you can pay by card or pay by, gift card or things like that. And it will show up as one of those options, and people will be able to purchase that likely through an ACH transaction. So they would have some sort of Amazon coin in their balance, and then they could carry that into Prime Day to spend as they see fit. I think maybe even a more current example to consider would be PayPal. So if you think about PayPal as a company that brought cards to the internet in the 1990s, PayPal has continued to adapt. They now have PYUSD, which is the PayPal stablecoin that's out there. It's in circulation. They are now embedding that into the PayPal checkout so that just like you can use PayPal checkout with a card, you can use PayPal checkout with PYUSD. So as these start to get baked into some of these existing consumer channels, that's where I think we're going to see more of the consumer dynamics start to change in the next year or two.
PayPal, by the way, has a big play in Bitcoin, and I know that because my Bitcoin is through Venmo, which actually houses it, and it's effortless on my part. So they just house it, and I assume it's still there. They send me little, I can click on an app and see how much I have.
Sure. Yeah. And the thing is, it's like Bitcoin is a form of digital currency, even though people, aren't spending it. PYUSD is a form of digital currency. And so PayPal has already been building many of those rails for the last few years, just like they started offering crypto investments to their customers through Venmo or even directly through PayPal, now offering PYUSD. So this is just a natural extension of that kind of crypto expansion that's been going on for several years.
So how would a credit union make money with stablecoin? Put aside the question of how they could lose money, just how would they make money?
Yeah, there will still be transaction fees. And so I don't want people to think that with card networks, you get 3%. With stablecoin networks, you get 0%. Even using a blockchain, you have these things called gas fees. And a lot of the modern blockchains have figured out how to do that extremely cheaply and quickly. So it really does function as real-time payments. But there are still transaction fees involved. And in particular, I think credit unions, as they think about offering stable coins to their members, that doesn't have to mean issuing their own stable coin. It could be USDC, it could be a credit union industry coin. It is that on-ramping and off-ramping where they will likely be able to introduce that fee structure. So if you think about like a member share account in fiat dollars, if somebody wants to transfer some of those dollars into a stable coin account, they could charge a fee for doing so. And the member might want to have that stable coin account. So then as it becomes more useful, whether it's shopping at Amazon or some other retailer, or as a peer-to-peer transfer mechanism, I think stable coins are going to be competing with Venmo and Zelle directly for peer-to-peer. And then as you think about, stable coin accounts and then I want to move that back into my share account so then I can, use it to, maybe pay rent or pay my mortgage if I need to use dollars for that. That off-ramp could also have a transaction fee. So I think there's just a lot of ways that credit unions can facilitate this movement between traditional finance and stablecoin finance. And the more they start building that interface and those bridges, I think the better prepared they will be for that. And like I said, there are some vendors already out in this space, but I think there's also a lot of learning and experimenting you can do with some of these tools that are also available for anyone to pick up.
Before we go, think hard about how you can help support this podcast so we can do more interviews with more thoughtful leaders in the credit union world. What we're trying to figure out here in these podcasts is what's next for credit unions. What can they do to really, really, really make a difference in the financial scene? Can't all be mega banks, can it? It's my hope it won't all be mega banks. It'll always be a place for credit unions. That's what we're discussing here. So figure out how you can help. Get in touch with me. This is rjmcgarvey@gmail.com. Robert McGarvey. Again, that's rjmcgarvey@gmail.com. Get in touch. We'll figure out a way that you can help. We need your support. We want your support. We thank you for your support. The CU 2.0 podcast.